crypto is digital money.
Yeah.
Whereas gold is outside the monetary system. Every drawdown in Bitcoin, you know you're at the end when people give up on Bitcoin. And this time they're talking about quantum and Bitcoin's broken, or like gold's been a better store of value. So I think people are quitting 54% of the time since Bitcoin was created. So actually Bitcoin's still been a better store of value.
If you've been watching the markets in early 2026, you've likely felt a massive sense of FOMO around gold. It's the story of the year. Gold prices pushing toward $5,000, hitting record highs, and seemingly making Bitcoin look like a nothing asset. But according to Tom Lee, head of research at Fundstrat, we are witnessing a massive gold illusion that is masking a once-in-a-generation entry point for digital assets. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I think a lot of people have FOMO around gold because gold's done so well. Gold now, though, has gotten so big. I don't think people realize this, but gold's network value is 40 trillion. The S&P 500, excluding the Mag 7, is 40. So gold is equal to the size of the stock market. Gold is twice as large as Europe's stock market now. Here's the thing. Gold's intraday move on January 31st was 5 trillion swing. That's 4 times bigger than Bitcoin right now. So I think gold has gotten so big. Well, one, that's why people have been buying it. But it's gotten so big that I think it's hard to argue that it's going to keep doing well. Because if gold doubles in price now from here, and some people are saying gold can get to 10,000, then it's twice as big as the S&P. Like, does that make sense?
Yeah, no, it does. Why do you think we are not correlated anymore? Because we were quite correlated to these assets for a little bit. Gold would go up, Bitcoin would go up, in previous cycles as well. What do you think that is right now? Why are we lagging so much?
At Fundstrat, we wrote a research report, like looking at the 5 reasons gold can go up. But of those, 2 of them would be bad for crypto. So one reason gold goes up is monetary easing. That benefits crypto. A second is geopolitical uncertainty. That benefits crypto. The third is dollar devaluation. That benefits crypto. But the next 2 don't benefit crypto. One is price momentum of metals. That creates FOMO. That's bad for crypto. And the last is if the monetary system is being questioned outright. Like if someone says, you know, all fiat currencies are going to break down, that's really bad for crypto because crypto is digital money.
Yeah.
Whereas gold is outside the monetary system. So I think part of what's happened is metals have gotten so much momentum. And then all this talk about Japan and the move in the rates there, the surprise with the new Fed, all of that made people nervous about any monetary system. And that's why gold basically went up a lot.
What's your take on the, actually both things. First of all, the new president in Japan, who won by landslide. How good could that be towards the U.S. economy? Given I believe she's quite aligned with President Trump. And second of all, Kevin Warsh, the new Fed chair, who should be coming into place in May, right?
But yeah, there'll be a confirmation process for him. On Japan, I mean, that's all good news because one, it's also probably a CapEx cycle coming because I think Japan and Europe are going to spend money on defense. So I think it's good for sort of global growth picking up. On the new Fed chair, I think in the beginning, people went through Warsh's prior statements and thought he was a hawk.
Yeah.
But that was illogical because, like, how would Trump and Bessent choose a Fed chair that they didn't vet to make sure he wasn't a potential dove? So I think now markets are starting to realize Kevin Warsh is a dove, but in a different way because he wants smaller balance sheets, which allows for lower interest rates. So and then of course in coordination with the Treasury Department. So I think it's actually, he'll be quite good for markets, but in a way that's actually probably good for Americans because if we can bring down long-term rates, then it allows housing to recover, and of course it's better for equities. I think there's rage quitting taking place,
Yes.
Which is a good sign.
Is it?
Yeah, because that's always the sign of a bottom, right? Take every drawdown in Bitcoin. You know you're at the end when people give up on Bitcoin. And this time they're talking about quantum and Bitcoin's broken, or like Gold's been a better store of value, so I think people are quitting. In the traditional finance world, there's more people saying they're glad they don't own Bitcoin versus finance people who own Bitcoin and are losing money. So to me, it's still a sign we're early because one, people have looked at the Bitcoin decline as proof they shouldn't invest in it, which I think means we're still early. It'd be different if people in finance were losing money in crypto and like rage selling it.
Yeah.
But the rage selling's happening more in the crypto world.
Yeah.
Almost 3 million of it's staked now. So, and I think we're half of the staking queue. Right, there's like 4 million ETH. Like, I think we're 2 million of that.
That is impressive.
Yeah.
If the world starts questioning the monetary system outright, people flee to outside money like gold. But Lee points out that since 1971, gold has actually been a terrible store of value, underperforming inflation 48% of the time. Since 2010, Bitcoin has outperformed inflation 97% of the time, even with the brutal bear markets. Gold looks better over the last few months, but the long-term math still favors the digital gold. We are at the end of the metal momentum trade and the beginning of the everything rally.
Basically, and we still have another 1.5 million on top of that to stake. So when we fully stake, I mean, we're taking supply out of Ethereum too, permanently.
There's who are the sellers? Who are these people? there's we gotta weed them all out. But that's coming.
Yeah, I mean, I think anyone who's new to crypto should keep in mind every bottom is V-shaped.
Yeah.
So there's not been a single Bitcoin bottom that wasn't V-shaped. So if you're trying to time the Bitcoin bottom, and if you don't get it right, you've missed a big entry point. So it's actually better to hold it into a downturn than to try to time it. Last year, I think crypto felt like a second-rate story versus AI.
Yeah.
Right, because people were buying anything AI related, data centers, even the Bitcoin miners. And then gold was just rising through it all of last year. And then suddenly gold really broke out to new highs and then went basically parabolic. And I think that was really painful for crypto people. I think that's more signs like that we're at the end of the selling, not the beginning. Because one, gold has not been a great store of value in its history. Actually, we just wrote a report on this at Fundstrat that since 1971, if you look at 3-year returns, gold has underperformed inflation 48% of the time. So in other words, if it's supposed to be a store of value, it should be outperforming inflation all the time. But half the time you own gold, you've done worse than inflation. Since 2010, when Bitcoin was first created, Bitcoin's outperformed inflation, even after the bear markets, 97% of the time. Gold has only beaten inflation 54% of the time since Bitcoin was created. So actually, Bitcoin's still been a better store of value relative to inflation. And even in the last 3 years, Bitcoin's beaten inflation. So, gold maybe looks better for the last few months, but I don't think that really means Bitcoin's done. And basically, Bitmine is a stock that's adding Ethereum every week. So if Ethereum goes down, Bitmine's stock is not going to go up, but it's going to outperform. Like for instance, even in 2026, Ethereum's down 32%, Bitmine's down 21%. So Bitmine's outperforming Ethereum. Last year, from June 30 to the end of the year, Bitmine was created on June 30th. Ethereum was up 22%, Bitmine was up 500. So Bitmine is outperforming Ethereum. But I think we're doing the right thing. One, we have no leverage. We've been keeping a big cash position. It's like around 600 million. And we're basically earning money every day. The staking rewards plus the interest on the cash is about $1 million a day.
Right. I think you guys, was it a couple days ago? You had about $50 million in ETH.
We're buying like 40, 50,000 a week.
Wow.
Yeah.
Every week.
Yeah. And the cash balance is growing. So we could be buying a lot more Ethereum if we wanted. Well, there's only 2 DATs that are kind of dominant, right? MicroStrategy for Bitcoin, because they have 700,000 Bitcoin. And then Bitmine, which has 4.4 million ETH. And then the next largest DAT is 1/5 the size. So I think everything else is, they're not necessarily differentiated stories anymore. Because if you're not the largest DAT, and if you don't have a clean balance sheet, because we have a clean balance sheet and we have a lot of financial flexibility. I mean, we have so much cash that we can write a $200 million check into an investment, we are in a maximum flexibility position. Like, so if Ethereum has a big decline, which I don't expect, so because I think we're close to the bottom, but if Ethereum had a big decline, we could, put $600 million to work that day. Right, then we could help set the bottom.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.